Welcome to Agribusiness Global Live. My name is Renee Targus. I'm the editor for Agribusiness Global and your host for today's webinar, Biological Companies, Stalling or Growing. We've got a great panel. I'm excited to introduce them to you, but before we do, I'd like to tell you a little bit about a live event we're having on the 6th and 7th of November in Jakarta, Indonesia. It's the Agribusiness Global Southeast Asia Conference. We'll have a lot of great material there for you to learn about, and lots of exhibitors and a chance to meet our presenters in person. I'll be there. I'd look forward to meeting you as well. So we hope you can make it, and we'd love to see you there. I'd like to introduce our panelists. We've got Kristen Sukalac. She's partner in operations and strategic consulting for Prospero and Partners, based out of France. We've got Rick Melnick. He's a partner and chief operating officer for DunhamTrimmer, based in the US. We've got Bob Trogele, independent board member and investor in energy and agricultural businesses. He's got about 20 years working experience with acquiring biological companies. He's also based in the US. We've got Steve Pearce, co-founder and managing partner of Chemovateq, Swiss Ag Investments, and he's in England right now. So we've got this great panel, and I think I'm just going to jump right into it because we've got a short amount of time and a lot of great information to talk about. So Kristen, I'm going to ask you the first question. So in your opinion, what biological companies are doing well? I mean, you don't have to exactly say what companies, but maybe examples of what biological companies are doing well, what others are not, why, and what does it take to successfully launch a biological product in today's market?
Thanks, Renee. I think the companies that I've seen do well share a certain number of characteristics. One of the things is they're very pragmatic and really focused on how the real world operates. And what I mean by that is a lot of times we see innovators who will start a company based on some research they've done, and they found something in the lab, and they think because the technology is great and it works under experimental conditions, that everybody's just going to, welcome them with open arms. And the reality is that, first of all, farmers are just absolutely inundated with various sales pitches and things. In most parts of the world, farmers are having a really tough time. Markets are volatile, climates are volatile. It's a really difficult job that farmers have to do. So they're relatively risk averse, and they're not going to just simply adopt something because it's the latest cool thing to do. And it's really important, therefore, that the companies who are putting products on the market really can make a solid pitch at a rational level to the farmers, but also at the end of the day, the companies that I see succeeding are companies that understand that they're really in the business of change management. And change management means you need to think much, much broader than just technical questions. You have to understand psychology. You have to understand, institutional friction. Is there even a regulatory framework that is friendly or at least not hostile to your product? Because one of the things that innovators forget is innovation is always ahead of regulation. I always say that, policy is forward-looking because it's setting all of these future goals for society, but regulation is always backwards-looking because it's usually trying to fix yesterday's problems. And the difficulties that innovators often have is they don't fit into the institutional boxes. And so bringing innovation to the market is really about going through institutional change, getting potential users to understand your product, to understand how to integrate it into what they're doing. And there's really fascinating research in the area of innovation about how, when you introduce an innovation, you need to help people understand how it's familiar to what they knew before, but also how it's different and exciting. But you can't tell them too much of how exciting and different it is, because then it becomes foreign and scary and turns them off. So there's really all kinds of human elements of being a successful company and being successful innovators that have to do with really understanding that at the end of the day, you're dealing with people and you're dealing with institutions and systems that people have built. And there are going to be vested interests, there's going to be power dynamics, there's going to just be resistance. There's all of these human factors. And I find that the companies that are being really successful get the balance right between the technical science and the human-centered issues. They don't overpromise what they're selling. They really do their homework as far as being able to demonstrate what their products can do in the real world, but they also know how to talk in terms of what the end user needs. They understand how to talk to other stakeholders who can be influencers on their success. And the ones who I find really don't succeed are the companies who promise the moon and the sun and the stars, and their product can do everything under all conditions. The other thing that I've seen bring companies down is overreach, where they try to address too many markets too soon in their organizational development. And they just don't have the capacity to deal with the nuances in all of those different situations. So those are some of the standouts for me.
What about what does it take to, like you were talking about, knowing regulations and a whole bunch of the human factors to launch a product successfully? Is there any other tips that you have for launching a product successfully in today's market?
I mean, I think that peer learning is a really powerful tool. And as far as also getting access to skills and intelligence and stuff that's outside of the company, I highly recommend that companies join their trade associations as soon as they possibly can. A lot of companies hesitate to do it because they don't have products on the market yet because budgets are really tight and everything. But there's so much intelligence in peer learning and networking that you get from participating in those sorts of organizations. And it's not just about paying your membership fee, it's really about engaging and getting involved. And those are really helpful ways to help your organization grow.
Great, thank you. Okay, Rick, I'm going to put this question to you, and I can repeat the question if you need me to, or are you ready for your answer?
I think so.
Okay, great, thank you.
Thanks for asking us to participate, Renee, and it's always nice to see Agribusiness Global taking a greater interest in biologicals. I think I would answer first that, there are different kinds of biologicals companies, and the multinationals are certainly getting involved. So if we're talking about the larger companies, I think their biggest challenge is those are organizations that were built to develop and sell chemicals and seeds. And so now they have to figure out how to integrate biologicals into their organization. So that from an R&D standpoint, that's much different. But from a sales perspective, that's also quite different. So it's a more technical sale when you're selling a biological than it is with a conventional. So you really have to focus on cultural change and helping your sales organization adapt to these new products. We have a lot of clients that are startups that come to us and they want to go to market, and many of the things that Kristen mentioned, a lot of times it's a scientist or maybe 2 or 3 people that have discovered some new activity in the lab, and they don't really understand the business of agriculture. They understand science very well, but they're not necessarily business people. So we always tell people, it's very important to make sure that you have a technology that's differentiated. And so it could be differentiated in a number of ways. It could be differentiated in its activity. It could be differentiated in its formulation. It can be differentiated in the manufacturing process. But if it's a Me Too product coming into the biological sphere where there's already, some pushback, or the hurdles for adoption are a little bit steeper, for all the reasons that Kristen mentioned, Me Too products are going to have a tough time. If it's just as good as another biological that's out there, or just as good as a chemical, and it's priced about the same, I don't think that companies understand that people are not going to change, even if it's a little bit different margin or a little bit different price. It takes a lot to make products work, and they're not going to necessarily change their whole system just because you brought another product to market. The next point I would make is that system word. So companies can't look at their products in a vacuum. They need to understand that growers operate in systems and that any product needs to fit in a system. And the system includes other products, and it also includes equipment. It includes application timing. And so the likelihood of a grower going out and doing, a pass just for their product is at a time when they otherwise wouldn't be making applications is probably pretty low. So they really need to understand that. They need to really understand how their product works, where it works, and where it doesn't work. And they have to be upfront about that. And in their trials, they need to fully explore all of that and have the answers when they come to market. The grower or the distributor is not going to embrace a trial and error approach with these products. You need to have the answers and have that fully vetted when you come to them. Another challenge that we see for companies coming to the US is they really don't understand the channel here. They don't understand how the influence and the importance that the channel has. We have a lot of clients that come to us and think that they're going to sell direct, and we have to tell them, well, you could try that. And sometimes, some companies have been successful in that, but really you need to work with the channel and not against the channel. And that's going to be key to their success. Yeah, I guess that's all for now. I'm interested to hear what other people have to say. I don't want to talk about all the points.
That's okay. But I think you brought up a good point as far as marketing their product is understanding the value propositions and making sure, it's differentiated with other products. And just a quick follow-up question. When you were talking about understanding the channel, can you just give maybe like a point of an example of that, of like what you've seen a company do successfully to use that or not?
Well, there's a company out there right now, we won't name names, but there is a company that's been successful in there because they're kind of going around the channel. But the reason they're able to do that is because the guys that are the leaders, the leadership in that company came from the channel, and they already have the networks, and they have the on-the-ground kind of grower sales force that they need to get their technologies out to market. So they're very successful with that. The channel also, there are different players in the channel. There's the larger distributors, there's the independents, and both of those entities are different, and you have to approach them a little bit differently. I'd say the larger guys are more, everybody's concerned about margin, certainly, but if you're dealing with one of the larger distributors, they're representing a whole bunch of companies. And so how are you going to differentiate yourself with them? The independents are more regional, and so sometimes you can develop, the biologicals companies can maybe start off there and develop stronger relationships. I think those companies tend to be more active in the demand creation side of things because they're looking to differentiate themselves from the bigger guys. So really, the company coming into the market really needs to understand the route to market and focus on that. And that's going to be a key factor in their success.
Okay, great. Thank you so much, Rick. Okay, Bob, I'm just going to repeat the question just because we've had some people join us since the first time I did. So the question is, what biological companies are doing well and what others are not? And you don't have to name any names, but just give examples. Why this is happening, and what does it take to successfully launch a biological product in today's market? Sorry, you're on mute. I was doing that too, so.
Yeah, good morning, everyone. It's a pleasure to be here. Listening to what Kristen and Rick said, I would 100% agree with their commentary. A lot of good nuggets in there for those who are listening. I'm going to take a different view of this, more, looking at it for my new chapter as an investor, and maybe give some case studies. So, but before I go, there's really 5 criteria I always look at: is who's the CEO? Does he have skin in the game? Does he have experience? Has he done this before? Does he have the energy, the persistence to get it done? Okay. And, a lot of times, like, it was mentioned, if it's 2 scientists, they've never done it before. They might be good scientists, but they're not, business people. So you have to find that person that can do that. I think your business model is important. Rick mentioned, how do you go to market access, for instance, right? What capabilities do you need? Then financing. Some of them just don't have the money to get it done, even if it's launching a product. IP, which wasn't really talked about. It was talked about a little bit in the sense of differentiation, but it's not only differentiation. What do you actually own on value that protects your business as you grow it, and at the same time, if you get to a point where you want to bring partners in or sell it, is attractive. And then I think, it was talked a lot about by both on the front of what's your culture look like, right? Is it an entrepreneurial culture? And, very different in larger companies if they're growing that business or if you're, a startup. So I'm going to give two case studies very quickly. So let's take Biotrope in Brazil, which just sold for 500+ million euros. Great friend of mine, entrepreneur, Antonio Zem, right? Financing went to Aqua Capital, got the money, bought manufacturing assets, right? Built a very strong, market access team, brought in the right people who had the customer contacts, and just grew at a tremendous rate. And had also some, very, I would say, good technology, but was also in a growth market. Okay, so that, that's, he hits all those boxes which I just talked about. Okay, then, I look at a company which I bought with my former team, Agrinos, right? Really great brand. Okay, I think they were spending at one point, they were burning 30 million a year, and had spent 200 million. Had a lab which we sold afterwards to Bioconsortia. Had a great chitin factory down in Sonora, Mexico. Built a new fermentation plant in Oregon. But as was mentioned before, no focus. Tried to go everywhere: China, Ukraine, Europe, South America, and just never really focused on success in one area. And had some great people, but just also great technology. Tried to go the quick route instead of doing a biopesticide registration, did a biostimulant registration, but great technology. But really a lack of, I'm going to say, a little bit of a lack of leadership and focus, right? And leadership, I'm not talking so much about the people, I'm talking more about the strategy, right? And finally, when COVID hit in 2020, the Norwegian investors probably said, well, we're also losing money on oil. This is burning 30 million a year. We're gonna go into bankruptcy, and it was an easy pickup. So that was two examples of success and failure. And I think Rick and Kristen mentioned some of the dynamics that were happening in both, which were key success factors. But you got to have technology, whether it's especially in manufacturing, formulation, application, and you got to have dedicated market access. And I think it's a real tough play for companies in the early stage to get both. And I think that's just and then finding the right investors also. I mean, I'm sure Stephen's going to talk a little bit about this, why his group is the right group to work with, because they've got experienced in this area. And a lot of times you'll find investors who don't have experience in this area, and they really can't help you other than giving you money. I think you need both. So with that, I'll hand back to you, Renee. You did have the question about launching products. Yeah, launching products in the I would say in the biological space, a very simple answer, and it was already said. You need to know how the product works. What's the mode of actions? You need to have biological proof, and biological proof versus pesticides and other biologicals, not just against the control. And then I think you also need to be prepared to have a lot of hand-holding, a lot of education at the farm level. And that means investing in people and agronomists who understand the space.
Great. Thank you, Bob. I just had a quick follow. Something that you and I had talked about at the trade summit, we were talking about how beyond investments, when these biological companies get acquired by larger companies, sometimes that's sort of their demise. They think that they've got all this sort of support and they're a part of this big company and they've got this track. But, you and I, do you want to comment about that a little bit, about sometimes when they're acquired by these bigger companies, they can maybe not thrive as much?
Well, integration is a bad word. I would like to see that more as a bolt-on, as either as a strategic business unit or as a standalone business, and then intelligently helping that I'm going to say that baby or that child to grow, okay, by educating it, by giving it resources, by giving it the right nutrition, adding more products in. But when you start integrating, and we've seen this, in the past, and Rick and Stephen can comment on that. When you integrated seed companies into chemical companies, was the same issue, right? Just a lot of times did not work very well. I think it's the same here. I think today you don't have to teach a farmer anymore today how to use a herbicide, a non-selective herbicide. But if you're bringing a new high-tech biological rational product into the market, and it's all about application, timing, what are setting the expectations, what are the soil and climate conditions, what are the water conditions, what are the agronomic conditions in the portfolio. It's a different game. And so there's a little bit of I would say, just from the get-go, a system and cultural conflict.
Okay, great, thanks. Okay, Steve. So a lot of this webinar is based on a presentation that you gave in Latin America about 2 years ago when you presented about biological companies and how so many of them fail. Do you want to, kind of answer the question that we've been talking about, but then also comment on that, from your experience of investing in biological companies and kind of seeing what's happening with them?
Sure. And I firstly echo, what Kristen, Rick, and Bob have said, in that, it's multifaceted, right? You need the right money, you need the right focus, you sure as hell need the right people, with all the people in the right seats on the bus, and you absolutely do need to understand where you're going, particularly if you're early on the innovation curve, to make sure that what you're innovating is going to be of use to the market, and the right market. Now, as it relates to companies, I would say that since we sat down and chatted in Panama that time, I think overall, I've got some numbers here from our Ag Bioscout company. If you look at capital going into Ag Biotech from early stage to late stage in terms of VC investments now, not private equity, venture capital, it's decreased significantly in the last 3 years. Okay, it was 4.5 billion in 21, 2 billion in and gone down to 2.4 billion in 23. And I would go out on a limb and say I would expect 2024, and this makes me sound like a real killjoy, but I would say 2024 in terms of deal number and availability of capital is probably going to be the worst year for the last 10 years. Now, why is that? That's a multi-million-dollar question, right? So I think you've got a lot of venture capital companies who are sitting on assets that would like to exit and can't. You've got a lot of companies as a result of that, potentially flaming out and becoming stranded assets. And I think it's worth remembering as well that, when we talk about biologicals, or at least when we look at biologicals from an investment perspective, we're ag tech investors. So biologicals for us is an area where we've got 62 different categories defined. So it's not a one brush sweeps all kind of scenario. And if you look at the top 5-6 biologicals companies as they're defined, two of them stand out head and shoulders above the rest in terms of their revenues, but they are making really modest margins. But their revenues are generated by biostimulants. Now, companies that are in the bioprotection space, you know, as Kirsten will forgot more than I know, you know, that they have a lot more regulatory hurdles to jump through. There are a lot more things they have to do in order to be able to get their product to market. So, you know, the sort of valley of death, as we call it, you know, is much longer and much harder to cross, you know, from a working capital and a funding perspective. So, you know, you'll tend to see a lot of those companies, you know, doing a seed round, then a Series A, and then maybe a slight twist on a Series A and call it Series A prime, and then maybe do a couple of, you know, what they call safe rounds or down rounds. You know, it takes time, and you know, it's a brutal environment, right? So notwithstanding all of the really positive and really good stuff that the panelists have said before, you know, it comes with a health warning in that, you know, if we are to pivot agricultural science in the way that we want to, both in terms of crop protection and crop nutrition, then we've got to do something significantly different in order to make these the right startups fly and get to scale in a way that makes them sustainable. Because without that, they're not going to be sustainable. They'll be integrated, they'll be swallowed up, or they'll just you know, hit the wall, never to be seen again. And you know, like we were saying in Panama a few years back, the failure rates are alarming, right? I mean, 75% at that time of all, I can't remember what it was, 16 or 19 billion that had gone into the sector was stalled or bankrupt. And that's not a good investment proposition, right? So, you know, in times when, you know, a lot of investors are seeking security in bond markets to get a more steady return, you know, money's scarce. So, you know, companies, I would implore companies who, and we get a lot of IMs, we get a lot of people coming to us for help on IMs, and more than happy to help, you know, because they need to be that much better now than ever before in order to make their story resonate with investors. Because there are so many companies out there pitching for money at a time when there is not as much money as there was. You know, it makes it very, very, very difficult. So yeah, I don't want to sound like a killjoy, but you know, very, you know, pragmatically speaking, I mean, we have a 60, as a first screen when we invest, we have a 60-point due diligence list that we go through. As part of another fund we participate in, they actually have a psychologist, a business psychologist, sit down with the leadership team and understand how they operate. So that's the level of sophistication that a lot of, you know, well, I say a lot, that we try to go to in order to make sure that we get as straight of edge on whether it's going to be a good investment or not, or whether, you know, we need to think of a long-term strategy or we need to bring in another partner. Because I think as both Rick and Kristen were saying, you know, a lot of people do really good science, and some of the stuff is just magical, but without the right ingredients to help fuel the growth, get them linked in with the right people, have the right kind of business mentors, have the right, you know, non-exec team who, you know, been around the block a few times and seen a few problems before, they're simply going to struggle. And, you know, you see a lot of singular technology companies, and we're very lucky insofar as we're able to, well, let's use a topical Olympic analogy, right? We just had the Olympics and we've got the Paralympics on now, right? If you go to the swimming pool, I don't know, there are probably 8 lanes, I don't know, maybe 8 or 10 lanes, but everyone's swimming in their lane. They're focused on what they're doing. And very often, you know, that's analogous to the investment space, in that you'll see a technology in lane 1, actually, that would probably marry and be accretive to a technology someone's working on in lane 4. But they don't speak because all they want to do is run their race as fast as they can, and they're focused on what they're doing. So, you know, this collaborative learning and a more methodical approach, I guess, is something that, you know, we're trying to bring by way of a conversation. And you know, I think, you know, sometimes hard times bring the necessity that's required to be at a level of pragmatism that, you know, that's been referred to early. Because, you know, the scary part of this is that, we will for sure lose a lot of really good technologies simply because they went for the wrong money, they flamed out, or they just went about it in the wrong way because they didn't get the right advice to begin with. And that's a crying shame because, as I say, if we're to do this Ag 3.0 and go into this regenerative farming and do things in a bigger, better, different and more precise, ecologically friendly way, we've got to do more to get more companies over the line. As it relates to the product sales piece, I can only speak to the line of sight that I've had through our investment in our company Bancela in Africa, Middle East. It is a biological technology aggregator and distributor. It does not compete with its customers in the channel in terms of, let's say, conventional crop chemistry and so on and so forth. But to Rick's point, it is a consultative sell. It is very different to going and buying a container of glyphosate or whatever else you can buy from a chemical perspective. It is a hands-on, hand-holding exercise, and we've taken a different category approach. I sort of ditched the old fungicides, herbicides, insecticides, plant growth regulator mindset that I had when I was a supply chain guy for different categories, particularly as it relates to biologicals, and that is invest, strengthen, protect, control. And the whole ISPC concept that we talked about in Florida recently, those are the things you have to take a programmed approach. Now, are biologicals making gains? For sure, they certainly are in revenues. They're not in margins, and some of the the negative net margins and EBITDAs that we're seeing have to change. So that requires that we do things in a smarter way. Now, for sure, there are lots of companies that are thriving really, really well, but we are in an environment where money's going to be harder and harder to come by. I think we're going to have a tough year from an investment perspective. So everybody needs to be on their mettle with regards to being pragmatic, having a mitigation strategy, not going after every shiny object that there is, and making sure that their R&D burn rates aren't crazy. So they're going to be able to live to survive in the next round. Always anybody listening, always here to help. We're very pragmatic investors. We invest because we're passionate in technologies. We are asked by other investment groups to not be a lead investor from a monetary perspective necessarily, but because we're passionate about ag and we have networks, that can often help. So I don't know if that answers your question or not, Renee, but that's my 10 cents worth.
Yeah, thank you. That's perfect. We've got some questions that we're starting to see in the Q&A. So I'm going to ask you all a quick question. You've got about 3 minutes to answer. So this is, from I know you're coming all from different perspectives, but what are 2 tips for a good business model, either for, a biological company or itself, or we have a lot of crop protection companies that want to acquire biological companies to diversify their portfolio. So that being said, Kristen, your first step, do you have 2 tips for a crop protection company wanting to acquire a biologicals company?
If I can give 1 tip for each model. So starting with the acquisition one and going back to something you said earlier about, why do so many companies get acquired and then fail? And I would actually turn that around and say, why do so many big companies acquire startups and then kill them? Because if anybody's read The Innovator's Dilemma, it's exactly that scenario. What happens is these big multinationals see a company that's got unique value and they acquire it, and they assume that the value is only the technology, and they completely ignore the culture. And they strip it of the culture as they integrate it into this big megalithic company, and they actually destroy the value that they've acquired. So for me, the big tip for multinationals is if they really do want to acquire these startups, they need to have a light hands approach and think about that, you can hold more water in a cupped hand than in a clenched fist. And it's got to be the same type of business model for these multinationals, is they actually have to resist integrating these companies into their corporate structures and trying to make them function the way the rest of the company does, because that is a surefire recipe to destroy the value that they've actually acquired. And so they'll end up with a technology, but it won't deliver on the value that they were expecting, because the value was more than just the technical expertise. So that's the one thing. And then I want to based on a case study, give an example of something that there's a biocontrol company I admire a lot, and what they're doing, which I think is really interesting. And it goes back to Steve's comment about needing to get out of the pool lanes and to be working together. And that is a biocontrol company that is actually working really closely with farmers and with their competitors in order to put together integrated programs that help farmers solve real world problems. And one of the real world problems that they help farmers solve is, how do I actually consistently meet the additional requirements that grocery stores and food processors are putting on me above and beyond the legal requirements that I have, as far as things like residues and stuff like that. And two of the examples that they explain to us they do is, they have one grocery store chain that even if they're below the legal limit, won't allow produce to have more than 3 residues that are detectable. So they work with farmers to do integrated pest management programs where they do use some chemicals, but they use them in the program in such a way that by the end of the growth cycle, there's no residues left, or very little residues left on the products. And the same thing for stores with 0 residues. But this company is very clear that their product alone can't solve the problem of the farmer, that their product actually works as a complement with another product, and it all works together. So they're actually cooperating and looking at how their products fit together with other companies' products. That, I think, is a completely foreign way of thinking to most of these companies, which think that they're going to go out and do world dominance, especially and also for the big companies that then take over the small companies. It's just a completely different way of thinking. So those are 2 tips and practical examples that I think really can help.
Great, thank you. I think I'm gonna, before we go to the other panelists, we've got some really good questions that people are posing on this Q&A. So I think we'll just jump into those Q&A right now. Panelists, please raise your hand if you want to answer or chime in on one of these questions. Okay, so the first one is, what is more important for small companies when they reach a transition point? Would it be cash flow and EBITDA positive, or would it be to have proprietary tech even with a negative EBITDA and cash burn? Which of you would like to take a shot at answering that? Okay, Steve.
Throw myself under the bus on this one. No one else is biting, right? But I think all companies hit an inflection point. I think all of those points are important, right? And if you're going to go in front of an investor with a negative EBITDA pitch, then that investor's going to want to dig really deep and understand how long he thinks you're going to be in a negative EBITDA situation for. So the key question then is, can your company scale? If it can, how's it going to scale? Where's it going to scale? Right, to Kristen's point earlier, a microbial that's being deployed in Brazil isn't necessarily going to be a microbial that's going to work in Denmark, right? So, what are your markets? It's all back to business focus. It's about, beginning with the end in mind. I honestly think that, if it's the right technology and you've got the right, you're talking to the right type of investor, then I think both those points are of equal significance. But from my perspective, I'd be like, okay, yeah. Well, let's face it. I mean, let's say, being a negative EBITDA isn't a rarity in this industry, right? You know, the reference I made earlier, of the 6 top companies, only 2 of them aren't doing negative EBITDAs, right? And that's since 2019. So, you know, whoever has asked the question, and if you're, you know, an entrepreneur who's got a negative, don't think you're alone. You're in there with everybody else. But it's how you scale, where you scale, you know, and how you get to that inflection point in terms of your fixed cost recovery, where your COGS is something that's going to sustain you, because that's the other issue, right? You know, a lot of the companies that we're talking about can't scale, and because they can't scale, they have a higher COGS, and because they have a higher COGS, they can't break into, you know, traditional row crop markets and compete with things that are in that space. And that's why you have so many companies, you know, that are going after high value markets, because that's all there is. Because A, the margins are higher, it can sustain them, and B, they can't hit the price points that, you know, you would expect in, you know, your traditional protein and carbohydrate row type crops. So yeah, that would be my sort of opening
Okay,
thoughts.
great. Thank
Yeah,
you.
maybe to follow up on that, basically with the cost of money it is today, you're gonna have difficult times attracting new money if you're not working capital positive. And if you're not working capital positive for 10 years, I think you got to readdress your business model. Something's not right, because your adoption rate is not fast enough. And you know, if you're thinking of an exit strategy, and it's just going to be on whether you have patents or not, that becomes a very difficult play.
Yeah, and just building on that again, if I may, Renee, you know, on the IP side, you know, we wouldn't buy out IP unless, you know, invest in pure play IP. You know, we'd probably find a company that could in-license it, because you're just not going to get the return. Most tech companies that we talk to, and this is an area of great opportunity, and one we're trying to address, is, you know, they see IP as a cost of doing business, as an insurance policy, not as a key differentiator. So to Bob's point, you know, you've got to you know, brought that IP and your strategy to life in a positive working capital way to attract the kind of attention that you're going to need to help you go the next round, and not have to do down rounds or safe rounds. So you're increasing the value of your shares as you go.
Okay, thank you. All right, I want to go to the, does any other panelists have anything to contribute to that, or I'll go to the next question? Okay. The next question is, what is your opinion regarding how large companies have bought other biological companies and have concentrated the power in 4 to 5 big companies? Does this make R&D and innovation difficult? And how does this change or move the biological market? Anybody want to try for that one? Rick, is that?
Sure, I'll go. And I was actually looking down a little bit. I think it relates to a coming question about how to historically synthetic companies get into the game. So, you know, it's a free market, and you can't stop the big companies from trying to get bigger and shouldering for market share, and they're going to see gaps in their portfolios, or they're going to see interesting technologies, and they're going to go after those technologies and try to bring them into the fold. And that's just natural. And it's also that can be good for the grower. That can be good for the grower, because those larger companies have sizable resources that can help to finish those products, make them more effective, get them to market faster, speed up the process. They have human resources that can help that process. It's also good for the small companies, because they're able to realize their dream and, you know, exit and sell or license their technology and enjoy the fruits of their labors. So I don't necessarily see that as a bad thing for anyone. That the consolidation, when I started in ag in the 90s, there were 20 big companies, and now there's, you know, 4 or 5, depending on how you look at it. I think, you know, as far as the larger companies being successful, I think it's really how you define success, and it's really going to start at the top of the organization. If you just look at biologicals in general, you mentioned a value proposition, Renee, at the beginning. So the value proposition fundamentally for these products is different than what it is for a conventional. If you're only evaluating efficacy to efficacy, then chances are the biological is going to come up short. But there are also other benefits like residue management, resistance management. There's a lot of chemicals that are being lost to policy changes and regulations. So the biologicals can fill in there and bring value where it's needed. From a company standpoint, I will say if you're the person in charge of bringing the biologicals business along in a large company, you have a very tough job. And that when I say starting at the top, if the number one person makes this commitment to biologicals, it can't just be an edict that they make publicly and then leave it up to the rest of the organization to figure out. They need to shepherd that commitment all the way down through management and down to the ground level. If I've seen companies that bring these products and then someone creates these expectations for the returns of these investments or the speed of returns for these investments that are just unrealistic. And so what happens is that's perceived within the organization as a failure when it doesn't need to be. It's going to take time for these products to get traction within the company, not just out in the field. And so I think if an organization, takes its time and looks realistically at what the investment means and how long it's going to take to fully bring it along and bring the people along, then they can be very successful. But it starts with how you define success and failure.
Great. Does any other of the panelists have anything that they want to add to that? Okay, go
Yeah,
ahead.
I mean, Rick is spot on, but done that, seen a lot of failures, think of an example, AgriQuest was one of the biggest ones, right? 500 million paid. I don't know, today the piece is sold off. But I would say, here's the key question. So if you're this is setting expectations inside your organization. If you're a $25 billion plus chemical company, and now you have a $200 million biorational business, even if you double it, even if you 5x it, it's never going to be as important as your $25 billion chemical business. So you have to, make sure your organization understands what's the cultural fit, what's the financial fit, what's the portfolio fit, what's the fit for the investor, what's the fit for your customer. So I'll leave it at that.
Kristen?
First of all, I want to echo what Rick said, that, I think acquisition by big companies is not necessarily a bad thing because among other things, if you want that technology to reach a large number of farmers in a large number of markets, those big organizations have sales and distribution channels that it would take years and years and years, if not decades, for small companies to grow into. So, it goes back to what is your definition of success? So if success is reaching more farmers, that can be a really positive thing. However, as far as, the belief that having a dynamic marketplace with lots of new entrants and lots of innovation and everything is a healthy thing, it's not just the companies we need to look at, especially on the biocontrol side. One of the biggest obstacles to more dynamic competition at the moment is outdated regulation. And if I could take the example of Europe, where it takes 8 to 10 years to bring a biocontrol product to market. Now, most investors are going to want to see a company starting to have a revenue well before 8 to 10 years, and they can't have a revenue if they don't have access to the market. So I hope there are some regulators on this call, and I would implore them to really look at rethinking regulatory processes to make them fit for purpose for these products. understanding that, you know, you're going to ask different questions. One of the things about products that are based on biological components, whether they're living or plant extracts or whatever, is unlike synthetic chemicals, naturally derived components come with a lot of empirical information. We're not starting from a blank page as far as what we know about them. And at the moment, very, very few regulatory processes actually take that fundamental difference of what we do and don't know about the products into account in the regulatory process. There's also, if I take the example of Europe, at least, huge opportunities just by streamlining the administrative processes in order to vastly speed up the bringing the products to the market. But anytime we try to have conversations with the regulators about the need to speed up the regulatory process, the first thing they say back to us is, well, we're not compromising on safety. But it's not about safety. It's about avoiding duplication. It's about avoiding needless multiplication of dossiers. For example, in the EU, where an active ingredient gets registered at the EU level, but then product registrations happen at the national level. So there's a multiplication of the same dossier being considered over and over and over again. That has costs for the companies, but it also has huge costs for the regulators. And they would have less work. They could pool, if they could pool their resources and work together, if we could have one-step processes for all of that. And this brings me back to my point about joining trade associations, because getting regulation changed is not anything any individual company can do. That's a collective process. And if you want to succeed as an individual company, you need to also contribute to the collective effort.
Great, thank you. I know, Steve, and I think you called it the Valley of Death, the regulations process. So yeah, I know there's a lot of aggravation about that. Steve, go ahead.
It's just great, yeah. And I think we can look to Brazil as a really good example of how you can turn that around. I can't remember what the numbers were that we put up in Panama, but it had gone from, I don't know, 100 registrations for biologicals up to, I don't know, 400 or 500 whenever we did the thing in Panama. Now it's, you know, well north of 600, going on into 700, right? So, you know, it can be done. And, you know, okay, whilst arguably you could say in Brazil a lot of what's being used in terms of biologicals from a microbial perspective is to aid in resistance management of chemicals. That's still a good thing, right? But, you know, those are the kinds of, you know, regulatory pushes that are required to drive things through in a way that, you know, give farmers the tools they need, particularly in the context of what Rick was saying, when, you know, a lot of chemicals, a lot of revocations there, you know, the only people who suffer are the growers, because, you know, you're taking away a tool with one hand and not allowing other tools to come, you know, into their toolbox fast enough, you know, in the other. So that's not a sustainable situation.
Right.
So one quick comment from my side is, if it takes 10 years, this is very different than in the chemical market. In the biological market, the science is dramatically changing very quickly. And by the time a product would hit the market, the technology has already changed as far as formulation, manufacturing, concentration, delivery, et cetera, et cetera. So you're actually basically wasting your time if you, from a regulatory perspective, if you have to wait 10 years to bring an old technology to the market. So, you know, and then there's going to be competitive markets like Brazil. They're going to be far ahead of other markets which have those type of hurdles. So some growers will have advantages and some growers will have disadvantages based on what their governments are doing.
Yeah, Rick actually did a great article for ABG talking about why Brazil's so successful in their biologicals, and we'll actually include a link in that into the blog post that we'll put out for this. All right, so we've got about 6 minutes left, and I want to get to one more question. And for those of you who have placed your questions in the Q&A we haven't answered, we will answer in that blog and send that out in 2 weeks' time along with a recording of this webinar. So The last question that I'd like to address is, and Bob, I think we could start you on this one. How important is it? Wait a second, is that the one? Sorry. Yeah. How important is it that startups have a bioinformatics strategy as you're evaluating early companies, specifically informatics that describe mode of action and biological genetic mechanisms behind efficacy?
So I'd like to really punt that to Stephen because that's what he's doing with AgBio and Invest. They've got a great screening process. Of course, just my comment is you got to know what your competition looks like, right? So it's simple. If you don't know what your competition looks like and what the playing field looks like, you don't really know how to play. So Stephen, I'll pass that on to you if you don't mind.
Yeah, no problem, and happy to answer. Thanks, Bob. And it does. You sort of peel the onion from exactly where you said. Sort of the seven habits, right? Begin with the end in mind. So yeah, I mean, bioinformatics are essential, not just in terms of what's going on in your own shop, but also what's going on in the broader catalog sense. I think we tend to take a bifurcated view of bioinformatics because it really depends whether we're dealing with, let's call it, some natural substances from a biological perspective, of which there are bajillions, and whether you're looking at a synthetic biology type of scenario where you're using some kind of GMO organism to synthesize a secondary metabolite of something in order to be able to hit the target. I would fully expect us to see more of that, but bioinformatics in terms of efficacy, yeah, absolutely. I mean, because that's like having a driving license. You're not going to get anywhere on your journey without being able to do that. Bioinformatics in terms of mode of action, 100%. And there are some companies who do massive screen to hit type numbers, looking at new modes of actions, not just across conventional chemistry, but also across biologicals. So there's a lot of information, a lot of data there, and it has to pass the mud on boots on a Monday test, as an esteemed board advisor of ours would say. Because at the end of the day, it's got to get into the hands of someone who can use it, and we have it has to be abuser friendly, because agriculture by its very nature is a tough environment, right? So from a bioinformatics perspective, in terms of the number of trial replicates, I mean, how many times have I seen an IM that's got 3 or 4 trial replicates, and that's the basis for the pitch. You need lots of replicates. You need to be intelligent trial design, being able to maximize the efficiency and being able to do that. So yeah, bioinformatics is an absolute must. Now it depends on where on the innovation curve you are with regard to how important that is. But yeah, for sure. I mean, we, as part of that aforementioned due diligence questionnaire, bioinformatics is, in terms of capability or access to that capability, is something that's really important to us. Great. And therefore should be important to anybody who, I guess, is trying to get money to, embark on the adventure they want to go on.
Mm-hmm. Yeah. Okay. All right, everyone. We're out of time at this point. Steve, Kristen, Bob, and Rick, thank you so much for your discussions. It looks like we have several questions that we didn't get to, but again, we will be answering those in a blog that we'll be posting in 2 weeks' time, along with the recording of this webinar. So thank you, everyone, for attending, and thank you again to our panelists for joining us with this discussion.
Thanks, Renee.